One of the things I like most is the money train. And the money train is this, is when someone has already have a profitable position in the options market, and what do? They don't take their profits, they roll their profits. Why? Because they're looking for more money. So let's take a look here at GPS. This is George Paul Sam. This is Gap Incorporated. And what a recovery, right? Just like their overall market. It's a buying frenzy out there. It was $5 in April, and now we're at $18, right back to 2020 levels. And the all-time, or the previous high on this one year to date is at 1986. So what we're looking at here in the options market is a trade that is going to profit off of a continued move. Now, earnings were tonight, and they look to be better than expected, but we're talking about better than expected of worst case scenario, and putting that behind us. So looking in the October contract here, this has 50 days to expire. And what we're seeing here is that in this contract, the 17 contract, this call here, 10,000 contracts traded today against an open interest of 12,000. Now, previously, these were opening sales, and now these are closing sales. And this transaction included selling this contract, the 17 call, and buying the 19 call. Now, in previous videos, I've talked about this roll. It looks like a bearish call spread, but if you don't know the previous activity, then you would get fooled by that. But this is actually a bullish roll. They're closing that 17 and they're rolling it higher into the 19s. So taking a look here at the timed sales, and this is what I'm talking about here. So on the 17 contract, they sold it here for $2.27, and you can see this transaction occurred at the same time. So they're actually getting out of both these contracts here and rolling up to the 19. So you can see here that all this traded at the same time, and they're closing out these 17s and 18s, and they're rolling into the 19 here. And that's right here at prices at $17.38. They think they're going to go all the way back. Again, when we look at that chart, back to $19. $19 is right at these 2020 highs here. So what we take from this activity here is they have profits. They locked up some of their profits because even though you're rolling the same amount, you've taken some profit, and it's not the same amount for that position that they purchased. If they purchased 17,500 of these 19 calls for $1.42, you take $142 times $17,500, and that's the full amount of money placed here. That's a substantial trade right there that has 50 days to expire. Now, the earnings from this, one of the things they had mentioned was they seen such an increase from their e-commerce store. So that could be the next catalyst. But overall, retail is rebounding here, and as things start to reopen, as we start to get further into the winter months, we could see the stores open back up, people coming back in, and overall, people are buying. They're buying things that you wouldn't think that they're buying. This is one of those. This is where money's going here, so why not 19?